Welcome back, listeners, to the BizBlend podcast, the show where we unpack what really happens after the success story. I'm your host, Sana, and today I'm bringing a conversation for all of you, which is, for anyone who has checked the big boxes. What's that? Build the business, exited or scaled, hit the income numbers they once dreamed about, and then quietly asked themselves, okay, now what? Because here's the uncomfortable truth, listeners. Making money is one skill. Keeping it working for you without losing control is an entirely different one. A lot of high earners hit what we are calling the post exit problem. Cash sitting idle, complex investment options that demand blind trust, or worse, handing over control just to feel like something is happening at least. And my guest today understands this problem from the inside. He started his first company at 18 with ambition, caffeine, and zero idea what he was doing. Over the next 2 decades, he built, scaled, and learned the hard way across marketing, e commerce, digital products, and consulting. And that journey led him to create Boardroom Capital, a platform built for people who have already done the hard work and now want their capital to work just as hard without handing over the keys. So, we are going to talk about control, AI driven investing, transparency, and the uncomfortable emotional side of wealth that people rarely talk about. So, listeners, let's get into it and let's welcome my incredible guest, Matthew Peck. Matthew, welcome to BizBlend, and I'm really, really excited for this one.
Thank you so much for having me. I'm super excited to talk about the topic today.
Absolutely, absolutely. I mean, if you can, for our listeners, I mean, in simple terms, Matthew, because this is something that can instantly trigger a bit of an emotional, like a fear, especially for people who have already exited, or maybe they are in the process, or for investors who have, who have made the money. So, in simple terms, what actually breaks for high earners after they have made it?
Yeah. So what's interesting about this is that because I've started a couple companies, I've sold some companies. I saw something the other day. I was talking to a friend, and it ties into this. We're talking about that a lot of entrepreneurs and business owners that start companies and then sell companies and kind of move on, they come back, they go on vacation, they come back and want to do something different. And a lot of that has to do with people looking for fulfillment more than anything
Mhm.
else. The money is great, but the fulfillment side is really what people are after. And that's why a lot of entrepreneurs, especially, start more than one company. And what happened to me is after I sold a company and I started a new one, is I had money from the sale of the business and I had money that was coming in from the new business. And I really enjoyed reaching those different income levels in my career.
Mhm. Mhm.
But as of in the last 5 years, I noticed that the next big levels of revenue that I want to generate and the income that I wanted to make, um, I had to take a lot of leaps of faith. I had to find money managers and I had to find people who would tell me about different types of funds, the different things that
Mhm.
they did to make money, which is nothing wrong with that. But as an entrepreneur, typically a lot of us like to have control within reason because we may not know certain things, but we do know good ideas when we see them because that's ultimately what made us successful in our own companies. And so what we did is over the last couple of years, we worked through building a platform that is Boardroom Capital, which is a Reg D 506C fund. But unlike most of the funds that are out there, we're not a black box, one strategy PDF company either. Most of them, you write a check and you hit a PDF every month or every quarter, and you don't really know what's going on inside of it. And we took our Reg D fund and created multiple algos and strategies that trade in Forex, crypto, commodities, and so forth. And it's all algorithms that automatically done. But what we've done is we've allowed entrepreneurs and executives to create an account within the fund and choose the book strategies. They get to choose their own portfolio ultimately, and they can change it without lockups. So for me as an entrepreneur, it's awesome because it was a problem I had. I wanted to increase my money with the money I had made, but I didn't want to necessarily just take someone's word for it. I wanted to see the data. I wanted to make my own choices and decisions. And that's really what we built for other people. And it's been a wild ride and it's been a ton of fun. I've got some great business partners that I work with. that we had a ton of time just figuring out how to make more improvements to the platform. And once again, we're entrepreneurs, so we understand a lot of the struggles that came with doing this and then building something unique.
Mm, mm. And Matthew, because you have, have gone through that phase, um, I mean, there is loss of structure or fear of messing up, what um, high earners have built. Maybe distrust in the traditional systems out there when it comes to wealth management, or maybe poor allocation of capital. But if the problem is lack of confidence in like what to do next, how do you see that hesitation show up in real behavior?
So, actually, it brings up a great point. When we had started this company specifically, there were hesitations that we had from early adopters because typically there's a lot of unknowns when you're building out a platform, especially if it's fintech. We've got developers, we've got team members in Australia, we got them in Germany, we've got them in the UK. So we're a fairly large organization that has a lot of people moving a lot of pieces. And honestly, I was scared in the beginning of it because one, there's a ton of regulation that goes into this. So the amount of red tape and lawyer meetings we've had to sit in to make sure that we were compliant across the board was just
Mm,
mind blowing. But it's good because we know that we're correct in what we're doing. But just in the technology piece, there was a ton of times that we would build something and it didn't work the first time. And it's
mm,
frustrating, and you have this great idea and you're trying to build it out, but it's the grit side of, the end result, you just have to figure out how to get there. And then when we had our early adopters, it was always the unknown, right? We have this data, we have all this information that we've been trading for this many years, and people are still skeptical because this is a new product. We're ultimately creating a new category for
mm,
the hedge fund market, and when this new is scary. And so we took a lot of small baby steps, but now that we've got early investors involved and everyone is very pleased with it, we're just now making continuous improvements to the platform. And now we're just ultimately spreading the word about what we're doing. But it's always there's always a scary factor. Even as an entrepreneur, we're calculated risk, right? We see something, we have an idea, and we look at it, we judge the risk to reward inside what we want to do, and then we make our decision from there. And it's still scary for people, especially because it's just not the same thing. They're used to handing over and saying the best, and we're allowing them to do something that they traditionally have not been able to do in the past. So it's definitely an interesting, it's fun conversations, but an interesting uphill battle.
yeah, yeah. I also believe, it's not the money or the awareness that there are solutions out there, but I think the biggest factor here is the trust. Because trust is, I think it sits at this pinnacle of especially in the world of business or entrepreneurship. I think trust is something that I think in today's day and age is kind of, it makes us feel that it's lacking in there. So the awareness of the fact that there is a platform which is built by people or person who have had the same problem or have been in the same kind of who have tested the waters. I think that is something that can actually help in building the initial trust.
You are 100% accurate in that, and it's actually interesting because when building the trust factor, because we are a new company, but our training strategies aren't new. We got some that have 5-year track records, and everything is we run roughly 165 million through all of our trading algorithms currently, and so
Okay.
is a lot of trust in that because people can see the data and they start to make that choice and have to make that leap of faith into it. And when you're a business owner and you've got capital that's sitting idle and you're trying to figure out what you can do next, there's a lot of concerns with that. I can actually use some of my neighbors because they have companies, and when they want to do something, it's a process. It's a 2 to 3 month process to be able to withdraw funds and do different things that it just really shouldn't have been that big of a deal. So when we created the platform, one of our big caveats with the fund and the way that we operate is we don't have lockup periods. So people can go and withdraw their funds, as needed. We do request a redemption period just so we can properly transfer everything out. But it's always an interesting thing because that's been the biggest part that so many people are scared of is that in most of the financial tools that people use, they're tied up. They can't withdraw from their 401k without these massive penalties, or they can't touch anything for this amount of time. And as a business owner, that's really hard to put your capital to work knowing that you can't touch it. Now it's not your capital anymore, it belongs to the other company that's, growing the investment, sure. But as business owners know, things change. And you have to have something that's adaptable to that market, which was one of our big things with building out the company is we didn't want people to be tied up and have a capital issue that they just couldn't do anything. So it was for us, it was a big deal in creating something that we did understand as entrepreneurs and business owners what we wanted out of the product. And then we built a product around that. We understood our needs for it and we knew that we weren't the only ones that had that problem. But it's still about trust. So, all the data that we have and all the testimonials and the the ability to see things live helps build a lot of that trust for a lot of people, but it's still a scary thing. I mean, anything new is
Yeah,
always gonna be scary.
it is. It is. 100%. That's on point. That's on point. And you know, I think it's also a very important question. A lot of traditional wealth advice, it always, boils down to hand it over to the experts and you are done. And why do you think, Matthew, that uh, this model, it feels increasingly broken for high performers?
So, it's actually interesting you say that because it was a conversation I had the other day with one of our early investors. And he runs a very large company, and it was actually a lot of conversation that we had. And here's the thing: I'm not a financial advisor. I'm a platform builder and a hedge fund owner, and it's cool and it's awesome. But I don't necessarily tell people what to do with it. And that's actually what people enjoy because
Mm,
most of the time people have to just like us, people have to rely on someone else telling them this is a good idea. But
mm,
most successful entrepreneurs are successful because they took the risk, they understood what they're doing, and they made the choices themselves.
yeah.
And so for a lot of entrepreneurs, that's a hard hurdle to handle of I'm just gonna give up my stuff to someone else and let them have it versus keeping control of it and making their own judgmental decisions. I mean, we're successful in our businesses because of the decisions that we made. Whether we started the company and we grew it and then we sold it, or if we grew it and then we're still running it, it's the decisions that we made that ultimately determined that trajectory. And so for us, that's what we want is we provide the strategies and the data, and then people can custom build their own portfolio based on their own risk profile, what they want out of it, whether it's super conservative, or if they want to play in some, markets that are considered riskier, it simply allows them the ability to build something that they want. So that's actually one of the biggest things for us is not telling people what to do, but providing them the right tools to make their own decisions, which is what they do every day in their own business.
Absolutely. I think this is such a it's a good example of, uh, like, the trick, the kind of lingo or the jargon, like tailor made or custom made solution. But anyway, I think that's a good way to actually at least still have that feeling. Okay, I have things in control. It's just that I'm getting a very like a bird eye view or maybe a detailed view of what exactly is happening right now, maybe in the market or any different industries, or maybe what could be good ways to utilize the funds I have or the money I have. But the end decision is mine.
Absolutely, and that's the caveat that we really focused on is that because we had both detailed views, but then we have overall views of everything. It just creates people that are allowed to create things that are super customizable to them. And that for us was what
Mhm.
we really wanted at the end of the day. We didn't just do one thing. We did several things and we believe we did it the right way that makes a lot of people very happy. The choices and
Mm.
options they have. Um, the typical investor that starts into will get a small amount to try it out, and that's a fair thing, right? But
Mhm.
we have yet to have anyone say they're unhappy with the platform.
And let's also bring the AI into this now, because like I think data analysis and whenever we talk about stocks or trading or investment, I guess AI is very rapidly kind of getting into it or maybe taking over it. So for some people, I think AI driven investing, it may sound empowering, but Matthew, for others, it may sound like, another black box. So, um, in your opinion, like what actually makes AI a tool for control instead of distance?
I'm so glad that you wanted to talk about AI and trading because some of our developers are very renowned in their respective fields of AI, and we do use AI in our algorithms, but I think there's also a bit of a misunderstanding about AI in trading. And here's what I'm referring to is that we have strategies that we use, and one of the key things that made our algorithms very different is that a lot of them offer a what we call portfolio trading. So instead of being a single trading strategy, it's a
Mhm.
portfolio of different strategies that work within the same algo. So, in other words, our AI that we use is part of the smart capital allocation and capital conservation model, which means the
Mhm.
algo will switch between strategies based on the results that it's getting in the markets and the market conditions. So people aren't tied to a single strategy and hoping that it works. The algorithm will decide based on how the market is performing and the data that it's getting and has to determine how it should allocate capital for the strategies and how it preserves capital. So if strategies aren't performing well, we don't want to put capital towards that. We want to pull that capital back and put it into something that is working. So it's ultimately, and the way I like to put it is our AI is like a conductor for an orchestra, and every piece of the orchestra is a new strategy that we use or strategy. And as you're creating a beautiful song, different parts play into that. So
Mhm.
that allows us to be more adaptable to markets that are considered volatile without being caught in a trading strategy that's one direction, one idea that it has. But that is how our AI is used in analyzing and capital allocation and the ability to change strategies based on those market conditions. And it's one of the reasons, honestly, we just had 2025 out there. This is a caveat. We just had 2025 end, and we did all of our end of year market analysis. Our investors got a 55-page report of all the trading data and every strategy, but we didn't have a single strategy that had a down year in 2025. And it's part of the capital conservation and capital allocation model that we use.
Mhm. Mm. Interesting. That's interesting. And are there any safeguards, like, and if there are, then, what particular safeguards matter most, so that this doesn't just become, um, okay, trust the algorithm, let it do its work, and let it give me the final decision, and I'll act accordingly with
You know,
better branding, of course. Yeah.
no, so it's perfect. And so you're right. And a lot of algorithms and trading strategies out there that people use will have they have safeguards in there, but at the same time they're a little bit different. And I can't speak for all of them clearly because they all vary a little bit. But the way that we utilize safeguards within the strategies is we have one, whenever you're making a decision about a strategy, you can see all the data, historical data from it. We give you the worst drawdowns it's ever had, how long it's been drawn, what the average drawdown is, the length of time that it has, true live balance equity. So people can see all the information and make that decision. But let's say there's I refer to them as black swan events that
Mhm.
something went wrong and there was a larger than normal drawdown or an equity issue. We have those safeguards in place to make sure that investors are protected. So there's never a chance that in which you lose all of your money inside of them. It just doesn't happen. We stopped trading because of those safeguards. And we believe that it's much better for investors and us, obviously, that we have these equity guards in place. So if there is a major world event that happens, then we can survive it without losing large amounts of capital forever or for the investors. But as an investor, you get to see all the data and understand like this strategy is more volatile and it had a larger drawdown, or this strategy was super conservative, had a very minimal drawdown. I like that. So you get to kind of tailor it to what you want to do, but we have all the information and it's there. So you can say, I'm comfortable with this, even though I know the risk of it. And again, as an entrepreneur or business owner, we weigh the risk versus reward on everything that we do, whether it's implementing a new structure within the company, it's hiring a new person, or it's deciding that the next growth step is we have to weigh the risk and the reward for doing that strategy within our company. It's the same thing for our platform. People can see all the information and decide for themselves what makes the most sense at the end of the day.
Yeah, yeah. And I believe, this is not outsourcing decision making, But I think the users, they're formalizing decision making here.
It is. They're making the decision based on the strategy they want to use, but we're implementing and executing everything. So as an entrepreneur, we're really used to delegating tasks. So we're used to saying like, "Hey, this is what I want to do. This is the goal and objective I want to achieve, and I need you to do it for me." So that is ultimately what is happening within the platform is they're saying, "I like these results. I'm okay with this risk. I need you to do what
Mm,
you do best." And then we are the execution piece for that.
yes, yes. And before we conclude, I think this is also very, it's kind of a pushback, because after all, we are talking about humans here. And yes, some would argue, Matthew, that too much control is exactly what gets high earners into trouble, like overconfidence or maybe too much of risk or tinkering, like thinking, they are the smartest person in every room. So, how do you prevent control from becoming interference?
Absolutely. So it's always interesting because when we work with investors, control is one of the things that they have. It's one of the reasons they don't typically invest in normal funds, right? Because they have to write over a check or to send the money to, and then they hope for the best and they get a PDF report. So there is zero control, but there's also zero transparency. We offer the ability for them to say, "Hey, this is what I've seen. This is what I noticed. I want to make that change." But there's always time for them to react to it. There's not an ability to say, "Hey, I don't want this today. This is my decision for what it is." We talk through it because as the market changes, we have a large team of analysts and a large team of execution people who actually manage this stuff. No, we always go back through and we say, "Hey, this is what we're noticing that thoughts going." But that's where we keep in contact with our investors. And we've talked through their strategies a lot, where they say, "I like this one," or "I don't like this one," or "Hey, I believe my goals have changed. I want to change this inside of it." So we always go back and have a questionnaire that we help entrepreneurs and
Mm,
executives think through the process so they don't make an emotional knee-jerk reaction to in the market. We like them to understand the bigger picture for what it is because as the same thing, you take an initial investment into a person, for instance, and you're hiring there's a risk factor involved with that one, and they're giving control of a piece of their company to that new person to do what they're
mm,
doing. So they have to trust their own judgment that they made that right decision. And obviously, one of the reasons we don't have lockups and stuff like that is because if they feel they made the wrong decision, they deserve the right to change that decision as well, but do it in a strategic manner, not in a emotional manner.
Because I think the fluidity kind of has increased, and I think people are now becoming more wary of the volatility in here because there's not any specific reason here. I mean, earlier we only used to think like a recession, just a recession, but I think there are multiple factors right now here playing. Whether it's any aspect we talk about, recession or geopolitical stuff, or everyday any kind of even pandemic changing the entire scenario, industries kind of losing their relevance. So yeah, that actually makes sense.
Do I agree with you? And that's part of one of the reasons that every month we send out market reports for our investors so they can see what our analysts are thinking, what we're seeing in the markets, what our thought process is. And that way they can also see how the strategies perform. Every strategy gets a write-up at the end of the month for the following month to know exactly what we did, what we changed, why we did these changes, so they can make a decision like, hey, I'm using this strategy, but I don't think I like the direction. And then they can make that decision on their own. But again, it's based on data, not a big red candle in the market or a green candle in the market. And it just allows them to be non-emotional with it and very much data driven through their thought process. Again, entrepreneurs and high income earners and executives, they got to the positions for a reason. And we believe that they deserve the right to make those choices, but we also help them understand, like, this is not an emotional thing. This is a long-term investment strategy with the ability to see more and have control over what they're doing.
Yeah, I think that's a brilliant case study, or maybe um an example of how human and machine is working in sync with each other.
I agree with you 100%. It's actually one of the coolest things that we do because it's
Yeah.
people are working behind it, but there's AI involved, and so it's a combination of both and understanding what you know.
Mm, yeah. And Matthew, some critics would also say that uh, platforms like like yours, it appeal mainly to people who already have money, not people trying to build it. So, is this model inherently exclusive?
So we are exclusive to accredited only investors, which in the United States has income requirements that they have for. We have another division that handles what we call retail or non-accredited. So they can people who maybe don't have the ability to fit that model, we have another model for them. But
Mhm.
again, we do everything based on a one-on-one analysis of it because we want to make sure our goal is to have a very happy clientele. And there's certain key things that we notice about people who um, are not as successful with this type of model in the past
Mm.
just based on so we talk to everyone first. It's not for everyone, but we don't necessarily exclude people from the get-go based on certain things. We like to have that conversation and make sure there's a clear expectations and understanding for what we are and also what we are not at the end of the day. So it's not even a sales call. When people talk to us, I've had people say, like, I don't want to be sold or anything. I was like, I'm not here to sell you anything. I'm here to just provide you the information to make sure it aligns with what you're doing. I was like, at the end of the day, if it doesn't work, it's not going to hurt my feelings. But right now, the fund itself is part of Boardroom Capital is for accredited investors only. But we do once again have a product line that we just released recently that are for non-accredited investors as well. So we're not exclusive to specific types of people, other than we make sure we set the right expectation in the beginning to keep everyone as happy as possible.
I think that's an honest approach. That's an honest approach. Super, Matthew. So, if people, sorry, if listeners they would like to connect with you, explore more about Boardroom, and then they would also like to share their thoughts or opinions. What would be the best way?
Yeah, and honestly, the favorite way to kind of communicate with people because I post a lot of content is either through Instagram or LinkedIn. On Instagram, you can find me at Matt Your Next Coach. Boardroom Capital is on Instagram and other places too. We do have a website for it, which is boardroomcapital.io. So any of those ways is always good for people to reach out. I have a lot of the conversations that start in Instagram and end up on WhatsApp. Just answering questions for folks as they come through and stuff. And so that's typically the easiest way for people to connect.
Super. Listeners, there you go. You heard it from Matthew. I'll just put all the links, all the details in the show notes. So find them attached along with this episode on whichever platform you're listening to your podcast right now. And I think the highlight here for me personally would be that the post exit problem isn't really about money. I believe it's about agency, it's about trust. It is about staying engaged without staying anxious. And for people who have spent their lives building, stepping away from control doesn't feel like rest. It feels like risk. So I hope that today's conversation offered a different framing, that smart systems don't replace responsibility, they protect it. So if you are at that stage where success has created new questions for you instead of answers, you're not behind. You're just at a different chapter. And Matthew, thank you so much for being candid and sharing your insights, your experiences about Boardroom Capital with all of us. Thank you.
Thank you for having me on. This was fantastic.
Thank you so much, listeners, for joining us on BizBlend. Until next time, this is your host, Sana, and I'll catch you in the next episode on BizBlend. Thank you for listening.